The stock market is an emotional yo-yo from day to day, and this week is no different. Before making any decisions, I wait until the end of the week to give my perspective and guidance. My focus is the weekly trend, not the daily yo-yo. Good morning, my name is Richard Lee and I manage the stockradar.com.au website for you. We run a quant strategy based on high probability signals to create a trading edge. We educate investors on price analysis, risk management, discipline techniques, systems, behavioural analysis, processes, trading models and portfolios. All of these are explored on my website to help you understand the market and trade a little bit better. Okay, so let's get straight into the markets. Firstly, stops are going to be my topic today, and we'll talk about that a bit later on trading tactics. We'll go through the overseas markets, we'll look at the ASX 200, see what the portfolio has done over the last week, look at some ASX stocks, and as I say, we'll go into trading tactics and have a look at the stops and how they are working. For the moment, let's go straight to the markets. And the Dow Jones, well, we're having a little bit of a trend test at the moment. We've got a little bit of sell-offs down here. You can see these three long bars the last 3 weeks have all come up and been supported. We're around the moving average. We can see some heightened activity down here on the selling side. So there are selling tests going on and the acceleration has slowed throughout this sideways period. So there's a test, there's a challenge. So far the buyers have been resilient this week, holding each pullback. But you know, the market's come back into a bit more balance for the moment, so we're just seeing a bit of a trend test. As I say here, the light is flashing amber, but buyers are not going away at this stage. So just flashing a little bit amber. We look at the Nasdaq, a slightly similar position. We're just back to this S1 area, the moving average. We've got some heightened volume here, which means we've got a healthy debate going on, which is a good thing. And the MACD just slowed a little bit as the market goes generally sideways and eases a little bit. So not too concerned, just keeping a watch file for the moment. Brent crude has been an interesting one this week. It's moved right into this area here, this red zone area, which we've been isolating for quite some time, and it's pushing pretty hard, and we've got some good volume down here pushing it, and momentum's just starting to kick a little bit higher from a positive level, so it's certainly giving it a shot. And as it says up here, a break above 84 opens up a world of clean air for crude if it runs higher. So people are talking about prices high. Well, we'll have to wait and see. It needs to get through this resistance before we're convinced. Some of the energy stocks have been a little bit better of late, as have some of the coal stocks. Okay, copper, similar position, or not similar position, it still seems to be under pressure. It's really pushing hard at this S1 level. We've got the three higher lows, we've got the support coming through here. There is pressure on here, not yet resolved at the moment. We may see more correction, we don't know. It may rally back towards F1, R1 and give that a new higher test again. So the jury's out a little bit, but the pressure's certainly on the downside here at the moment. And gold, was really not talking about anything here. It's just pottering around, generally weak, has a rally, then gets trodden on. So we're not too worried about gold. We're out of the gold stocks at the moment. Okay, so now we go to the ASX 200, which again is similar to the overseas markets. It's coming back. This is probably the deepest correction we've seen in this whole move up, believe it, since we had the COVID crash. So we've got this S1 here, which is a pretty important level, the old high for support. We've seen some good buying coming in this week, supporting some of the pullbacks, but the pressure is still a bit on the downside. So it's a trend challenge at the moment. We're keeping an eye on it, and we can see the momentum down here has slowed a little bit, but still remains positive. So again, flashing a little bit amber, but not too concerned at this stage. Having said that, last week we lost 9 stocks. Out of our portfolio of 77, there was 85, there's now 77 in there, 86, now 77. The 5-stock portfolio is still full, the 10-stock portfolio has lost one, and the conservative portfolio is 8 out of 20 at this stage. The sectors are property, banks. Banks are still there, they're just resilient, they're holding this market together. And then we've got the diversified finance, which is some good stocks in there moving along quite well. So that sector's becoming a bit of a builder. And the other one is they're building our portfolio. The March one shows we were actually since March, we're up about just over 12% at the moment. Not too sure what it's doing today, but we'll have a little look at that. So the portfolios have just come back a little bit, as has the market, so we're just a little bit wary at the moment. A little bit of rotation going on between some stocks. Okay, so now let's get in and have a look at some stocks. Okay, so last week we looked at JB Hi-Fi, Technology One. There's a few stocks there we looked at that have done okay. BHP's been a bit of a disaster. This week we're going to look at JB Hi-Fi to start with. It's a stock that we're watching at the moment just to see how it performs and how I look at these things. We still got our big resistance level here. It's come off that S1 level a little bit this week, but we have a lot of work to do up here to get any higher. Moving average, all this resistance, all these highs here. We've got some heavy selling off here. This rally is looking very weak. Momentum is negative. It really is a stay away and wait to see what happens. If this S1 breaks, we could see a further correction, which we don't want to really be involved in. So neutral is the word on JB Hi-Fi. Still, trend intensity rating is still -8. Okay, one of the stalwarts, we had a good rally a couple of days ago, and CBA tried to push through these highs. It really, it has made new all-time highs recently, above $95. Excuse me. Trend intensity rating is 7, but we've had 3 hard pushes at this 105, sort of 117 area, and each time we've been slapped down again, but we've got these higher lows here of resilience. An interesting picture here, CBA just always surprises on the upside. That and the banks have been holding, have been the steadying factor in this market. We can even see here down here, we've got a big selling test in this trend, a big selling week last week. The market did come down, but sure enough, the buyers are straight back in there this week on big volume, pushing this stock up again. So the trend is still unfolding. We have a new all-time high. The trend intensity rating is +7, so nothing really to worry about CBA at the moment. No concerns there. Okay, now travel stocks. Now we had a little bit of a sell-off last week, but there's some really good gains. Recently, I covered them in the newsletter last week, Qantas, Flight Centre, Webjet, Hello World, all those stocks. And here we've got Flight Centre today, and we can see what's happening here. Although we did have a bit of a pullback yesterday, it's certainly marched higher over the last few weeks. So this hasn't put a big dent in the rally. We've seen a very good rally here through resistance. Volume has been excellent. MACD is expanding nicely from a low base. So this is still looking very good. Trend intensity rating is +8. So for Flight Centre, depends whether you want to play this game or not. If you don't, stay away from it. But if we do, we've got a good break here. And that's suggesting to me that this Flight Centre may well go higher from here. So it's looking okay. And maybe this time is going to be the time that Flight Centre is going to start recovering, because we know it was a stock that came down from much higher levels down to around $10. So it was cut down to size pretty quickly. Okay, and one of the diversified financial stocks we've been following for a while since the breakup. We watched this stock climb nicely from its break above 726. It's now been up to around 950. It's come back a little bit, just under $9 yesterday. I'm not too sure what's happened today, but the trend still unfolds, and we're still in this wave. This is more like an impulse drifting type price action, as I've said here. So we're still looking for R1 as a high probability chance. Keep lifting your stop just to make sure you protect what profit you've got in there at the moment. So we can see here the buyers have been pushing this stock. The selling hasn't been any significant. Momentum is still very strong. So again, we can worry about these things, but there's nothing really to worry about. Stand back, get your perspective. This is just a drifting pattern, and it gets more serious, then we'll respond accordingly. But for the moment, IPH looks very good. Trend intensity rating is carrying it higher at +8. Okay, now the next one I want to look at is a recent entry we took in last week, which is CQR, just to see what's going on there. It's had a little break up here. Let me just move this across here. It's had a little break above here, just nudging above here. Hasn't really kicked on higher yet, but still, we have a very, very good structure here of higher lows, resistance point here. These sellers are going to start turning to buyers fairly quickly if we move much higher here. The volume's been very good, and momentum is also starting to bite. So we just focus on this trend reversal pattern, and we set our stop, and we let the pattern unfold until our stop goes off. So this is all looking very good for the moment. So we'll just watch this from week to week. Trend intensity rating should be not +3, it should be more like 6 or 7 as it's an entry this week. So that's a wrong one, sorry about that. Okay, now there's been a few stocks of late. There's been a changing shape of this market quite a bit recently, and we've seen some of these miners like BHP, Fortescue, Mineral Resources just come off on huge volumes, which has been rather extraordinary. And we've also got another stock here out of the financial sector. Now, Mr. Magellan here, Mr. Hamish Douglas, I think he's had a little bit too much cash maybe, and not taking advantage of the last run. But for some reason, investors are not liking this one. And since the stop went off here, this is when stocks look good and they look high, and you've got to make sure if it goes wrong, you get out. So this one actually looked like it was starting to break up high. We're going to break this trend. We had a little trend reversal here. We had a bit of volume here, a bit of momentum. It wasn't starting off with a maximum rating, but was giving a qualifying rating. It then rallied on high and looked very, very good indeed. So we're quite excited about this. it's a Stockradar stock. But sure enough, from this point here, just above $55, it's just been plummeted down and is now down around $32. And also, the volume is high, and if we just push this up, get rid of this little bit over here, you can get an idea of how this volume is looking here. This is some serious selling going on here down to S2. So we're lucky we did take the stop here, and we did get out, and we saved ourselves some bacon, and this is what a lot of it's all about. Even though things can look good, if your stop goes off, get out. It's not about being right or wrong. It's about protecting your money. And when the odds go, when the odds go to risk-on status, you've got to be very, very careful. Okay, so that's Magellan, and that's just listening to a stop. Okay, I talked about energy before. Energy's been moving ahead quite well, and I know a lot of people have been talking about these stocks haven't responded lately to the oil price. Well, now they are. Higher oil prices, higher gas prices, higher coal prices. It's all happening here. Woodside has been a real, weight around a lot of people's neck, I think, of late. But finally it's starting to turn up, and we've got a fairly good pattern here. Now, Woodside, as you may know, has come from much higher levels a long time ago. So up around 55, $70 in fact, Woodside was at one stage. So we've now come right back down to 16. We're now forming a little reversal pattern here of higher lows, and we've got the resistance point here. So this is a fairly large structure that we've got here. It looks pretty good to me. The signs are good. We've got some nice volume starting to appear on this upside. Momentum is moving towards neutral, not there yet. We've moved above the average, which is starting to turn up again. Now we're just going to really watch this big break zone here, up around just around $26.70, $27. That's the area I'm looking at the moment. So that's the trend reversal structure, and if it does break that, that's a good chance that this trend, long trend down trend from $70 may all be reversed. It probably depends a little bit on the oil price, but it is certainly attracting some attention at the moment, as has some other energy stocks like Beach Petroleum, which is one of our stock picks. Okay, now, so that's Woodside, not looking too bad. Keep an eye on that one. And another one here, which is South 32, again. Some of the mines I said, like BHP, Rio, iron ore stocks have all come off. Some of the other ones, like aluminium and stuff, are not turning around and doing quite well. And South 32 has done very well since the entry here, just above $2.40. It's now above $3.60. It hasn't really had any significant pullbacks all the way through here, although it did go sideways for a little bit. Nothing too bad, but again, we're just seeing this price rise again on some great volume. This has got the wow factor of this stock, so look out for this price. It's R1's the big area we're looking forward to next. Momentum is bullish. This is fantastic. It's above the average. Trend intensity rating is 10 for S32. Finally, it's starting to perform as everyone had hoped it would eventually. So South 32 is quite a nice little one that's done very well for us. Okay, so again, top-down approaches. You've got BHP, Rio, Fortescue, South 32, all sorts of different stocks in there. Some are doing well, some are not. Alumina's another one we're high, which is doing quite well. So you just got to be observant and watch your stops, and don't be too ego-driven with the way you trade. Okay, so now what I want to get into is the trading tactics. Last week I went through, the last 2 weeks, the Stockradar solution regarding putting processes together and managing a portfolio of stocks. So this week I just want to talk a little bit more about stops themselves, because a few people keep asking me about how I set them, what do you do, how do they work, why they're so good. Well, I'm going to go through them today and tell you why you should be using them and why they are so good. But you must listen to them. So stops about pushing that button. When the stop is hit, you push that button to make sure you exit the stock when you're told. Okay, so first off, let's go to a little bit of fab analysis, a little bit of old-time fab analysis here. So we're going to look at the features of stops. Firstly, they're very, very simple. Easy to set, easy to manage. Now, what I do is price analysis, and price analysis allows us to place common sense price structures around identifying and isolating high probability entry and exit point, I should say. Now, so it's really a matter of if this happens, then I do that, which is all my processes are driven by that. But things like stops, we can see price levels that we can observe and put stops on to create a more high probability chance of them being right. So fab analysis is they are simple and easy to set because we have good structure around them. Advantages, well, there's two advantages. One is they limit your losses because you can, and only you can do that, limit those losses. I can't do it for you, no one else can, only you can do it. Okay, and the other one, lock in profits. locking in profits, don't let them escape. And we always we get very excited about a stock that goes up and our emotions build up and the targets get higher and higher, but in reality, excesses breed that sort of thing, so you be very, very careful. Don't get too reckless, because when stocks start coming down, you've got to make sure you protect that profit and hang on to it. And that's how you balance your budget, make your money, and generate revenue. Okay, so that's an important part of it. Benefits. Firstly, they help you make money, because if you do cut those losses and run those profits, you will not be right all the time. It's the odds game we're playing all the time. Keeps you safe. Keeps you in control. So you control, rather than you responding to the market, you respond to your own trade plan, because what prices do, okay? And it reduces stress. Like this old guy here, Mr. Keith Richards, he's a chill fella, even at whatever age he is. He's okay, he's enjoying life, he just takes it as it comes, and he's relaxed about things and not getting too worried about life itself. So, just having stops in place is like a protection thing, it's like a comfort thing, it keeps you safe and will help you relax and chill a little bit more about how you trade. Okay, so what haunts us all, and I have this conversation with members all the time, our ability to do the job properly and accept that processes and discipline are it. Follow the processes and the discipline and you will come out okay. We have stops for a reason. We don't just put a stop there and ignore it. We have a stop there because when it's hit, we get out. So just push that button is what you need to do. I kept reiterating this because it's a conversation I have all the time with people saying, I know, but I didn't. And you lost money. Okay, so that's with stops, that's what's happened with those. Okay, now, I did talk to you before. Sorry, I just missed a slide here, which is a very, very important slide. It's all the implementation of a stop. Now, with stops, there are different ways of setting them. So what I'm going to do is I'm going to give you a template for what to do. It gives you a rough idea of what you need to include and how you need to approach it. I've got certain parameters that I use, and you can input your own parameters or you can follow mine, whatever you like. But I'm just going to go through how I do it. So my initial thing is to set a maximum risk stop. I'm only prepared to lose X amount of money on this stop, and that's when my stop will first go, okay? I set the stop within boundaries all the time. Within a percentage boundary, it's always travelling along behind the price within a boundary, okay? So within that boundary that I set myself, I have lows, I have closes, I have moving averages, all those things that I can use to put my stop level just on to keep some sort of probability factor that will help us fine-tune things. A stop is never moved down, okay? Always up. It is moved to break even as soon as I possibly can. Once I'm at break even, there's a known loss situation, and that is important. When a price starts to move up and it hits a resistance or it starts to hesitate, the common sense thing then to do is to tighten your stop. And I may even tighten my stop out of my boundaries a little bit within to even tighter than maybe 10%, because if a stop hesitates, I want to force the issue to get a result. Okay, so resistance, hesitation, or after a strong advance, a very strong advance which we see sometimes, we don't want to see all those profits disappear, so we lift our stop up nice and tight to make sure we maintain that, because they don't happen all the time, but when they do, they're nice to have. If we are stopped out, we can always take a new high, so it's not the end of the world, it's not the end of the trade. I'm always looking to capture the major parts of trends, and if a new high is made, that signals to me the possibility of a new trend phase occurring, even if I've been stopped out or not. Also, I'm only weekly, so my stops are never on the market. I make the decisions on Friday as to if my stop has gone off, and I execute on Monday. So I'm really ignoring a lot of this daily noise, and this week is a really good example. We've just had this yo-yo market this week, up, down, all around, driving everybody mad, and really I had to sit back and watch all this happen to the end of the week and see where we are after all the emotions have died down and settled down a bit, and I can sit there for the weekend and have a good look at what the market's done and how the stops in. So all this implementation thing here, you can see this, it's reproduced on the Stockradar website. If you go to About and Guide to Using Stockradar, you can see this. There's a whole lot of items regarding using Stockradar, but this is one of them, stops. Okay, so that stops, that gives you an idea of why you use them, how I use them. This is a template, not a definite thing for you to use. Okay, now, what haunts us? Talked about that before, you must implement them. Okay, now I want to go through briefly a portfolio checkup. Just to the portfolio we've been running, building a portfolio we've been running since March. A couple of comments I want to make at this stage. Firstly, portfolios are, you hold portfolios for a reason because you want to make money. And that doesn't mean you're going to make money tomorrow or the next day. So the start date can have an effect. If the market's in sideways or down, your portfolio may not start off straight away. But as long as you have those stops in place, you're going to limit any losses. And you're going to pick it up when the market picks up or when your stocks pick up. So the start date effect can have a huge effect on your initial results, but over time they will converge, okay? And the bad times and the good times, and we have more good times than bad times in our portfolios, so that's what will happen. You must follow signals to reproduce these returns, i.e. what I'm saying to there is don't overlay your own strategies or your own thinking on what I'm trying to do, because I have a certain strategy and a focus. If you try and overlay what you want to do on my strategy, then you'll find it very difficult to make proper decisions. Okay? And that will also affect the returns you get. Don't expect it to happen from day one. Okay? It could be day 2, day 3, whatever, but and it doesn't happen from day one. Be realistic, have common sense. This is a time, things are taking time. The results I've been generating have been over a period of 20 years. We have good times, the last year's been a great time, and we have bad times. But we need to survive all those things, the GFC, COVID. You have to survive those things because they happen all the time. Every 2 years there's about a 10% correction. Every 10 years there's about a 30 to 50% correction. So you've got to be able to wear those, otherwise don't play the game. All right, so that's building a portfolio. Now what I want to do is have a quick look at the portfolio, just so you can see what I do with these sorts of things. So this is such a simple spreadsheet here. You can see all the positions I've had since March. There are 4 at the top here: JB Hi-Fi, Mineral Resources, Adelaide, Brighton, IGO have all been closed out. And if we go across here, we can see the result of the closeout here. JB Hi-Fi was a loss of 16%, so out of my 15% risk limit, there's a slight slippage there, that happens. Mineral Resources, $20, we're glad we saved that one because it's now down the tubes. Adelaide Brighton really sort of went nowhere, but the stock went off, so we took a small loss and stopped out of this one. And IGO came back a bit, but we still maintained some profit potential there. And that was only in a couple of months, so when you analyse that, that's still good return for your money. So don't forget that sort of thing when you are entering these positions. Now, the current positions, we've got Washington, Sol Patterson, computer shares still in there, doing pretty well, 4 to 15, 19%, 20%. Car sales is pretty neutral, down 2. WiseTech has been a good one, started off pretty strongly. Boy, that Nasdaq's been a yo-yo this week, as has the tech stocks. But it's still up just around 12% at the moment. And Incitec Pivot replaced IGO this week, and it's up about $14.8, $14, so that's a bit flat at the moment. So if you have a look at the dashboard, which gives you an idea of how your portfolio is performing, there's all sorts of information here. But what we really want to know is this portfolio return, which is down here at 12.59%. This is a starting balance of 5,000. We can see our unrealised P&L, our realised P&L, gross trading P&L, and our net P&L, including our dividend income, and that gives us a result of 12.59 since March. So that's pretty good. We'll just keep an eye on that one for the moment, but that's how I look at the portfolio, and that's how it's functioning. It's doing exactly the right things. We've made a couple of good profits in there. We've got out of a couple of stocks we need to get out of, and the profile of the 5 stocks we have at the moment is pretty good at the moment. So that's really what I wanted to talk to you a bit about there. So that's the portfolios. Okay, so that's really about it for today. The newsletter was out last week. We did look at those travel stocks. Okay, so have a look at the newsletter, and we did do a review of Hello World in the Stock Alert thing there section. So the newsletter's still out. So go to the website and you can pick that up. It's under the newsletter tab. Okay, so for this week, I've got 4 words for you: common sense, calm, important. Observe and respond. Okay, this is what we do, the key elements of what we're trying to do. Stops are your undistracted lifeline to navigating the market noise. They don't think and they don't care. They just are, and that's why we should follow them. Okay, in the end, successful trading is your choice. You are in control of your own destiny. When you take your stops and things like that, that is really controlling what you need to do. So you need to learn to control your losses. That's the easy bit. You just do it. Learn how to protect profits. That's the fun bit. Take the angst out, cool heads, make cool decisions. Okay, so take a step back, take a load off and enjoy your trading and follow your trade plan. Okay, so good luck for the trading week. Thanks for listening. I hope you all learned something today, and I'll see you all next week.